Hey guys, this is Jeff and I'm back with another video teaching you guys a little bit about technical analysis. Last time we looked at the Fibonacci tool, Fibonacci retracement tool. Before that, support and resistance. Today we'll be looking at something called moving averages. So firstly, when you come to a chart, most charts will offer you the option of using indicators. Indicators are tools that help you basically identify entry and exit points. That's what they're supposed to do. Me personally, I'm not that big a fan of indicators. You can use them, but for me, the less you use, the better, because it keeps your trading simpler, and really all you want to be looking at is price. But some indicators can help you do that, and one of them is moving average. So yeah, there's two types of moving averages. There's there's more than two types, but there's two types we'll be looking at. You've got your simple moving averages, which is basically just it's a calculation based on the closing price of each period, and it's added up and divided by the amount of periods, basically. So we're looking at the daily chart, so it'll be based on how many days there have been. The exponential moving average is basically very similar to the simple moving average, except for it reacts faster and puts more weight on current price. So yeah, I could go into a bit more detail, but I want to keep this simple for you guys. You don't actually have to know it, but if you do want to know, just give it a quick Google. Might leave a link in the description. But yeah, moving on. So if you basically, like I was saying before, most charts will give you the option of using these indicators. And so on TradingView, all you have to do is go up to this little bit here where it says indicators, and then we just have to have a little look. Scroll. See, there's so many moving averages, so many. So it can be very complicated. But yeah, let's take a look at the simple moving average. A lot of the time, it'll just be called moving average. Sometimes it'll be called simple moving average, or it would just be SMA or MA. So yeah, let's have a look at it. Let's get it on there. So yeah, see, now we have this line like was going across, and what that is a moving average. Basically, this is how it's basically put to you in a visual form. But we have to tweak the settings. There are different types of moving averages. A lot of people look at different settings to the moving averages. I personally like the 200 or the 255 moving averages, and because I usually just look at the daily charts most of the time when I'm doing my analysis, unless I want to be super accurate with my entries. But yeah, the daily chart gives you the best picture, in my opinion, when you're using moving averages, the 200 moving average and the 255, because there's approximately that amount of days in trading days in the markets, so it makes sense to use that calculation. But some people like to use the 50 moving average or 100 and things like that. So yeah, let's change the settings on some of these. So let's go here, inputs. Let's change this to 200. Let's change the color just to make it a bit clear. Let's make it red. See, now the line's changed position because now it's based on 200 days. It's got a different shape, and it's given us a smooth look at the way price is moving. A general rule of thumb is that if price is above the 200 MA, then it's in an uptrend, and if it's below, it's in a downtrend. Let's change the other one to 255. Let's do that. keep it blue actually. Okay, and as you can see now it's down here, closer to the 200 MA. And let's change this one to 50 for fun. I don't ever use it, but hey, just for demonstration purposes. There we go. As you can see, the 50 MA is a lot closer to current price. And so yeah, as you can see, this has got different. Let me change the color of this actually. But yeah, as you can see, they're different in different positions. Let's make this one green. They're in different positions based on their different settings, which you can tweak or change. A lot of people use moving averages in different ways. Some people will wait for them to cross over and buy and sell based on that. So if it crosses over downwards, then they'll sell. They see that as a signal to sell whatever they're trading, or if it crosses over upwards, that they see it as a signal to buy. Personally, I use the 200 MA and the 255, but mostly the 200. So let's just get rid of these. You can just delete them by pressing this, as support and resistance. So if the 200 MA coincides with resistance that I have already outlined, it just gives me more of a reason to sell. Or if it coincides with support, it gives me more of a reason to buy. It's just, giving yourself more of a reason, reinforcing your analysis with different tools. So not to say you should just cloud your charts with loads of different indicators and then wait for them all to coincide. No, that's just gonna confuse you. It's not needed. Most of those indicators aren't gonna help. So yeah, that's basically how I use them. I also use the exponential moving average, which we can get up here. Let's find it. Where is it? Here it's called moving average exponential. So let's get that there. Where is it? Let's get it up again. There we go. So yeah, and then I'll change it up to 200. And yeah, if, for example, let's say I outlined some support here. Let's get this line out. Which there was a little bit, I suppose, and it coincides, and both the 200 EMA and 200 MA are both at this point have a confluence at this point lined up with my analysis of where I thought support was. Then I'd be like, yeah, that'd be a great place to put an order. And yeah, so that's how I use it. Some people wait for it to cross over. So for example, when the 200 MA crossed the 200 EMA here, they would have seen that as a signal to place a buy order, and yeah, went from there. So yeah, I hope I've kept it clear. I hope I haven't left anything else out either, but that's just the basics of moving averages. There's different settings, different types of moving averages, but for me personally, I like to just use them as the 200 moving average and the 200 exponential moving average as support and resistance, and just basically to reinforce my my own ideas of where support and resistance are. I don't really let it determine my trade choice alone. I just use simple price action trading, which is basically just looking at price, where it stopped, where it went, those sorts of things, support and resistance basically. and use the moving averages to reinforce that. Yeah, so I hope that was clear. If you have any questions, please leave them in the comments below. I'll be happy to answer them. Thanks for watching. Please leave a like if you enjoyed it, and subscribe if you haven't already. So yeah, see you next time.